Hello and welcome. It is Friday, the 30th day of August, 2019. My name is Derek, and this is a precious metals update. All bets, trades, and of the like within each his own risk and their own reward. We'll take a look at gold, silver, platinum, and palladium, and the gold to silver ratio as well. But we'll start it off within gold, and we're looking at the price at 1537, and I got data going back to 1975. It was actually $33 low at the start. I got data back to 1968. Then up to about 850, down to 250, up to 2000, all that sort of deal. And on the quarterly chart, we are now just for the first time, having exitation of the 18 average of highs since the decline. As it had the last time that happened would have been April of 2002. It left it at about 312, again up to 1900. But during that entire run, it did not spend a moment below the 18 average of lows. And it barely spent any time at all. Just the 2008 situation below the 18 of high. So just a phenomenal straight up move. What it didn't do was break any of this long term resistance in here. And it just stayed this entire trend for a sum of about a little over 1 decade, or about a hair above 10 years. So it then hit the 18 average of highs, it broke below the lows, and as it broke below the lows, it wasn't able to get above the highs, really, at least until now. Definitely it's the first clear break that we have had. Now, as far as some price areas for where the gold price can go to, I don't think five figures is anywhere near a laughable situation. I got to think it's actually a more of a realistic situation moving forward. For what I'm going to do is I'm going to put in this here, which is gold divided by the government debt, multiply a million. And I got the multiply a million just so I can get a number because the government debt is so damn high. 69.8 is that number right now. During the 2011 highs, it was at about 120. During the 2000 lows, it was down to 47. Basically, we're at the same prices that we were, in one way of looking at it, back in October 1996 when gold was probably under 300. And this is a handle, we'll call it, of 842. Back at the 1980 highs, 850, 900 even, 900, closer to 1,000 possible. Well, more than 10 times higher to get there. So if we take 10 times higher than the price we're at now for gold, which is at 15,000, well, of course the debt would go up too, but it would take a serious move to retest any of these previous levels that it would have had back at that time point. And the national debt's like 22 trillion. If I was in charge, I could pay that baby off in a month. Easy. Easy. Yeah, think how? Okay. Well, I would put out a new law because that's what governments can do. And this is directed to all suns that any and all suns that come near Earth. The your sun must rise in the south and set in the north. Failure to do so is a $1 trillion fine. Yeah, I'll have that debt paid off in less than a month. We'll have an accounts receivable like no other because I don't think the sun's going to pay us. And if it does, they'll pay us. We can pay it off that way. And I don't think it's going to change. I think it's going to continue rising and setting, and rising in the east and west. Yeah, rising in the east, setting in the west. Anyway, that's just a stupid joke, obviously. What's not a joke is the monetary economic model that has created so much debt in this world on so many levels. Gold, it's just a metal that happens to be on the atomic symbol of elements. So it's a natural, real metal. Not like it's easy to get by any means, but anyway, let's just go to different time frames. Monthly chart, pause month last month, and that's the end of the month this month. So a concise move up to Fibonacci, barely piercing above. That's maybe I said that before, maybe I didn't. Weekly chart just continuing to make its grind up higher, and on the daily term time frame, still hanging in there. And short term, we've resisted this level of Fibonacci. Now we've been seeing it, supporting it so far. Still, we'll just have to wait and see because when a situation like this occurs, it's just one of those spots where, yeah, okay, more times than not, you will get resistance. So maybe we should say it's a smart bet to come down to this level. Well, it is as it is. If it doesn't, then this thing can go up fast and furious. And as I mentioned, of course, we are now on the more longer term for the first time getting a real true excitation of this 18. That I got to think all sell-offs. Again, I wouldn't be, I would expect that that this area can hold the moves. Thus, the 1321, this line in here, would be maybe the area I'd be very strongly suggesting or thinking. I wouldn't be surprised if it bottoms there means if it goes down, that's where the lowest bottom I think would be. Is another way of putting it. Now let's switch this up to the GLD, which is the Spider Gold Trust Gold Shares NPV. And I really don't want to go much over the chart and even these gaps that are like whatever. But what surprises me is the exchanges. See, I got a lot of experience and knowledge on the crypto exchanges, and it's very common on exchanges to have multiple base currencies and cryptos. Bitcoin, the dollar tether, maybe Ethereum, Binance coin. It's a bunch of base currencies you can use. So then, why do we not have a GLD market on I don't know, whatever market.com? And I'm trying to think of one offhand. I thought of Expedia, but that would get you flying somewhere. Well, Ameritrade. There's one example right there. Whatever. Any of those exchanges. That would be an easy way to trade the gold to silver ratio. The stock market in gold, I would have this. This is what the prices were an hour ago. And this is what the prices were on January 1st to start this year and to start January and to start the decade. There was no Bitcoin gold market. In fact, Bitcoin was pretty much useless and worthless on January 1st, 2010. But if it would have opened when the Bitstamp exchange opened, it would have opened at 0.0615. Now it's at 66.71 and it was 30.46. But there'd be Amazon and GLD. And literally all this would be is let's just assume you have this exchange. If you have SLV, you could sell it for gold. Or if you have GLD, you could sell it for SLV. Back and forth. Which would be a way of trading the gold to silver ratio. And right now, the GSR, as it can be pronounced in an acronym, well, had 8 straight days down here. This correctionary move, making this lower high, and then once it came down, it's went into its correctionary play. So this was a correctionary move from the down move into here, and this down move was a correctionary move from getting above the 18 average of highs. So it wasn't able to get back above it, and then when it failed and left it here a few days ago, it has been just continuously down. Yesterday it didn't go down as much. It only went down 0.26%. It was down more at one point, then it rallied back, but now down a 0.5% again today. Most certainly a clear break below this level of support, and even this level of resistance uh, almost at the year-to-date lows, which would be about 81 and two-thirds. This thing has been, of course, it's way high overall. It's been down to here. It's even been lower than that. So we'll see how this continues going forward. I'm predicting, and this is again my prediction. Do what you need to do yourself. I'm predicting that as we move into the next decade, not only will the price action or this movement get to this previous 2011 low of about 32, but it will not only then continue to go lower to the and it's not much of a move going next, like the 16 historic ratio, but then continue to go lower below 10. How much below 10? Well, Webbot said parity. I think that might be a little bit of a I'm going a little too far, but not really, because I feel the fair ratio is like 7 or 8. That's my feeling. That's just it. I'm not going to go on too much more. But I also know that markets go way overvalued and overextended on each side. So for this market to go way high and way low, I feel if the real ratio is 8 to 1, then it's going to go way below that, and then of course, then go higher there after that. Okay, so let's transition back into silver. On the quarterly chart, it's attempting its excitation of the 18 average of highs, as gold's already done it. Previous times in which it's done that, it was a reattempt to get back over it back here in 2009, and then it succeeded to go up to 50. It did so again in October 2003 for a phenomenal move. It did so again here in 1998 for a failed move, but it didn't have a fast move after that, but it was a long wait. Excitation here again. I guess I really can't count that. I guess excitation really was here in 93, but this one did have a failed move at excitation here in April of 1987 as it got above 8.5. As I mentioned, $8 has been big resistance for silver. We can see how it was a little bit in this area here. And then I guess it had another excitation here. But that's what it's trying to do amongst that time frame. And of course, we're looking at this with the previous match of the 1980 high. The fact that I even have to say that is almost an insult. But, or not really an insult. It's actually a big, major compliment to the price manipulators to the downside, based on my opinion, because quite frankly, if I were to say that, I mean, this market could have, you could said, okay, should have maybe came down to like say 50, maybe or another way of doing it is maybe it should have came into like here and then just work its way up, maybe come back down, and then after that point, make some sort of move to come back higher, and then all that type of stuff. I mean, you could have said the market done that, or at least when you compare things like the Dow Jones and all the so many other things, and not only that, but real world goods and things that you buy as far as stuff like auto sales, homes, your salt, your sugar, so many different things. Everything has gone way up in price because the national debt has gone up so much. The money creation, the fiat currency has inflated so much that that's why I call it the insult, if you will. But it's also a way of stating that to me prices are very suppressed, and in the break of this level of resistance after this extremely long and even deep price correction, we had a low of about $1.25 here, up to 50, and then a 61.8% down move, back to previous high, and then a higher low rally, about a bit better than more than a 38.2% correction here, and then to come back, have a significant higher low to this area. And then it becomes a very interesting situation on the break. And it wouldn't surprise me that when we get here, these charts, these weekly and monthly charts, are going to be well overextended. It's just always the way. And I'll be saying, I don't know. I mean, if it doesn't, I don't know. Maybe we could have a little bit of a pullback to 32, or maybe we just go sideways here. But if we break 50, seeing like 100, 200, 300 fast is like no surprise. So just one of those early things in advance. But yeah, most likely the weekly, the monthly, and the quarterly charts will be way overextended when it third reaches rather, the $50 level. Now for the month, this is a pretty good gain. We have 13%. Some other prettiest good candles. There was 17%. So this is the best month since June of 2016, pending a great 4% or whatever move to top that at the end of the day. And when we look at this on the, I guess we'll go, well, the daily chart, just hanging in there, doing really, really well. Leg higher here at 16 and a half in July. Leg higher here at the 17 change mark. And right now it's a leg higher at the 18 and a half mark. Still, of course, well above the 18 average. We can see when it came up here, it took a little bit of time and price to go down. Here it had this volatile day, but it was just really just going sideways. It got to this higher on August the 7th and managed to really go through time to correct in here. a huge, nice three candle move up, even four or five, whatever. But just over the last few days, going sideways nicely. Let's look next at palladium. And it's got an interesting month as it's up now, up 1.7% at 1542. Thus, it's higher than gold now, barely. Pretty much the exact same price. And, for me, I would own an ounce of palladium, and I was about to buy an ounce of palladium. Right back in here. Somewhere in here, right around 950. And then I looked at my bill. Oh wow, much higher because there was like Canadian sales tax, which is quite expensive. It's over 10%. Yeah, I don't like that. Yeah, I bought silver instead. So this is up like 50% since then when silver's up 10. Still, nonetheless, that's fine. But it's unfortunate, but I'll try to get some in time being. There's not much palladium out there, and it's most certainly one of those lesser known markets. But on the daily chart today, a most certainly significant day, as we have point low, key high, higher low to the last low before. Since then, it's doing very successful, doing nice within the 18. It established this level of resistance at about 1490 change, and of course, it's gotten above that handle today. Obviously, when we take a look at this on the single-hour term time frame, it came up to this point yesterday morning and then resisted to a higher low to this one. Getting above the 18 average, did so at the end of the day last night at midnight or so. Getting above it here, it really started to first got going at 4 o'clock in the morning and having a nice move at 8 o'clock, as we can see on the 4 minute time frame, really getting above here at 8:24 in the morning, and still hasn't stopped, although the momentum has most certainly slowed down. Looking at the quarterly chart, above the highs from the millennium, the dot com bubble, or the dot com highs, I think that's a better way for me to put it. And just normal volatility, a little over 1,000, going to under 200. Of course, now at 1,500, and there's just all these prices from beforehand. Platinum is next. And on its quarterly term time frame, it's actually still at a declining 18 average. It's near the 18 average of highs, but it's just at this stage just flattening out the bed. We had some key support back in the 1990s at about 300 and change. It got above the resistance area of about 630 in 2003, establishing a high over 2000. We have this low in here. Wasn't able to get above it on the 2011 point. And it's been re-supporting it. So of all the metals, it came down to its stock market crash time frame or fall of 2008 levels. The gold and silver didn't do that. Obviously, palladium didn't do that either. Gold had a low of about 700, so its low was like over 1,000. Silver went to $8.50, and its low, of course, at around 14 or something. So it's happened to, of course, not do as well on the way up from the low, and then still having a decent sized decline. Now, recently, it's had a nice little breakout here, and recently, just a couple of days ago, and still continuing on forward as we get above the 18 average of highs on Wednesday. Nice little continuation Thursday, as it had a little bit of a price correction going a little bit below the open, not much, but a bit. Most certainly more higher close yesterday than the day prior to that. And an update was still up by 1.2% after over 4.5% the day before. Right now it's up 2.25%, so it's continuing its gain on the single-hour term. It came up to this level high, we'll call that yesterday, and correcting within the 18. Who cares if it goes below the 18? It filled this empty space from this high, this low. It even made a higher low to here, which is just like a whatever bonus. But it successfully stayed within the 18. It held and stayed above the 18 average of lows for this run. Got above it, excitation occurred, comes back to previous high, retracement back, and then this period here, which was a couple hours ago, comes back to this level and has been pausing and collecting or just staying within it for Well, these periods only 13 minutes and 25 seconds left, so basically 2 full hours of nice, good, productive consolidation. So the metals as a whole, I think, are looking very, very good. I haven't seen copper. Let me just take a quick look at that just to see what's going on within that. I want to take a look at it first on the quarterly. What's a coal future? Anyway, I'm not going to take a look. The country garden futures, really. There could be a lot of interesting things in here. I guess we just go to the one, and that's where it comes in. There's like no. I'll get the daily term, but there's like no long term data. And it's just doing nothing. I have copper prices normally. I guess HG. Okay, there we go. That works. Okay, so having a lot of difficulties, at least especially compared to the precious metals. This is a base metal. On the monthly chart, it's having excitation to the downside on the 18 average of lows, as it's been in a long sideways consolidation mainly for the last decade and a half. Thank you for tuning in. Have yourself a great day. Bye bye.